What's up, guys? In this video, we're going to be looking at the top 3 stocks that have been growing the fastest and also have a high potential of growth for the coming months and even years. So we're going to be looking at exactly these 3 stocks, the technical, the fundamental analysis, and we're going to go in detail exactly what these companies are all about. So make sure you stay tuned. Now let's go right into the video. Alright guys, before we get into the video, make sure you like the video and subscribe if you're new to the channel. Let's get to 200 likes. I really appreciate it, guys. So these stocks have been performing very well, and these are the stocks with the highest year-over-year earnings per share EPS growth for the most recent quarters. So basically what that means is these companies have been generating money and they can reinvest it or return to shareholders. Like some of these companies have been paying dividends. So even though they paid dividends, they still have, the capacity and the money left over for them, to reinvest in their company and to grow exponentially, so that is exactly why these stocks are handpicked and why these stocks also have potential for high growth in the next coming months, not only in June, for the next coming months and for the next, second or third quarters, so we're going to be looking at exactly these 3 stocks. So the first stock that we're going to be looking at is ticker symbol ACB. So this stock provides generic pharmaceutical, over-the-counter healthcare products, home healthcare supplies and equipment, and related services to healthcare providers. So as you can see over here, the stock has been actually performing very well. This is exactly where the whole pandemic situation kind of happened, and the stock recovered very well and is actually trading around a broke kind of the resistance around over here at $96-97 area, and it broke out substantially very well. So it's kind of trading super high. And one of the important things you want to see is the past week, the past month performance, in the quarter performance, in half the year. It's been green super solid. So this is really the stock of this company has been growing substantially very well. And overall, this is the website for this company. As you can see over here, they are hiring and they produce different products. As they said, they're healthcare products, they manufacture different things, and they provide supplies to other pharmaceutical companies, which is awesome. And they also fight the opioid epidemic, so that is also one of the things that's really important. You can go and do more research about it if you want to become a long-term investor with this specific company. Now let's look at the technical analysis. As I mentioned before a little bit, the stock broke out significantly over here from this price point, which like volume kind of showed up a little bit, and it broke out from this area over here, and it's kind of trading around the high that it made around like $100, and performance has been super solid green, and the share outstanding for this company is around 205 million, but the share for the public to buy and hold is around 146.2 million. And as you can see over here, the company the majority is held by institutions, so that basically means hedge funds, hedge funds and other major, investment banks and things like that are holding the company 67% of it. And, the market cap is 20.23 billion. And this company also pays a dividend of 1.68, so that is one of the things that is super important, Now, the important thing is the EPS over here is 7.56. And if you want to also get paid while you are holding the stock, the dividend yield is 1.69%, which is relatively low, but it's really good. You want these companies that have high capped, they don't pay a lot out, but they're sustainable. They're not going to reduce their dividends. They're not going to reduce their dividends, but their potential is going to increase their dividends. So their ex-dividend date already passed, and the 52-week range for this company was between $72 to $102. So there's not a lot of volatility going on, but the company has been growing substantially higher and is kind of trading within the average volume range. So there's a lot of transaction happening, and it's really fantastic. So this is why the stock is really growing a lot. So if you're interested in investing in the stock, so this is one of the stocks that you want to get involved in. Now let's get into the second stock. All right, guys, before we get into the second stock, if you're new to the channel, make sure you subscribe, and if you please like the video, I really appreciate it. That will help out the channel a lot. So the second stock that we're going to be looking at is going to be MGM Resorts International. It's going to be the ticker symbol MGM. All right, guys, so what this company is all about is this company operates a casino resorts. It has gaming, hotel, convention, dining, entertainment, and a lot of different things. So this company has been temporarily shut down because of the pandemic, but now everything is getting back to normal. So everything is getting being open and back again. So as you can see over here from the stock chart, as you can see over here, it's been beaten down. It's been going down due to the pandemic, and it's recovering. So it had like this channel over here, as you can see. There's a channel that happened over here, kind of even broke out of this channel. If you're like a technical trader, it kind of broke out. So it's just something that you really want to see. So when these pandemic situations kind of subside and we start to reopen, these companies are definitely going to get back to where they're from, because they were eventually a profitable companies. It's just this pandemic that kind of devastated them a lot, So as you can see over here, they've been trading around like $35. But in the past, before this pandemic hit, it was kind of trading around between, $30 to $35, and it just crashed. So there's a high potential for, if things get back to normal, or if things are getting to get better, the stock can actually, project that everything's going to get back to normal and basically go back to where it's trading in the past, So as you can see over here from the company's website, they're actually saying ready to welcome you back safely. So they're basically opening up again. They're in Las Vegas. They have casinos if you want to go there. Right now, I'm not recommending you go there, but like after things get settled down a little bit, see if there is something, there's no second wave or anything like that. If things start to get better, you can definitely go to Vegas and check out MGM Resorts. Also, you can invest in it right now. So as you can see over here, this company also has a dividend yield. It's super low, 0.01 0.05%. And the 52-week range for this company was between $5.90 between $5.90 to $34.64. So this thing has just been rocking it. It's been going up significantly higher. As you can see over here, it almost hit a penny stock level. If it went below $5, it's going to be considered a penny stock. But as you can see over here, it's just been recovering very, very well. So the ideal price point to get involved with it would have been around right over here, but still, this is the fastest growing, and it's potentially is going to continue, to see positive results, and it's going to continue to kind of recover from the situation that it's involved right now. So that is going to be it. Now let's look at the third stock. All right, guys, before we get into that third stock, make sure you like and subscribe if you're new to the channel. I really, really appreciate it. If you have any questions, make sure you drop it in the comment section below, and I'll respond to your question as soon as possible. So the third stock that we're going to be looking at is going to be ticker symbol ALGN. Now, this company is actually involved in a design and manufacturing, and it helps you with teeth realignment. So if you have issues with your teeth and things like that, so this company manufactures things that will help align your teeth. So there's been a significant amount of growth for this company, as you can see over here. Even though the stock is actually kind of trading significantly higher, it's in the high, like it's above like $200. You can still get involved with it by fractional shares, or you can get like a few shares, 2, 3, or even 100 shares if you really want to get involved with it. But there's some other options that if you can get involved in this stock, because there's a lot of growth in it. As you can see over here, when the pandemic hit, it really hit a low of $140, but it just recovered significantly higher to the upside. And you can see over here, this company website, they basically help you realign your teeth. A smile is universal, and you can just do more research on their website, what kind of things that they manufacture before you get involved, invest in the company. Key metrics, net revenue is $2.4 billion. So that is impressive. And the patients, the employees that they have, and active patents that they have, so this is really, really awesome. So this is a great company, I believe, because of the growth that it had, and also they're super, super, transparent about it. At the beginning of the website, you can just actually see their revenue, their annual net revenue, and people, even though the pandemic hit and things like that, people would definitely want to realign their teeth, because like a smile is like something that's really, really important to help with confidence and things like that. So as you can see over here, it's just bouncing up significantly, pretty good, close to the highs that I made of around like $300. So it's kind of right around the 280 area of like kind of like a resistance area of this price point. So it can definitely, if it holds this price point, it can definitely go to $300, and you can be just buying and holding it can definitely be beneficial too for the future. Since this company is actually growing fastly and highly. So unfortunately, this company does not pay dividends, and the share of the float is actually super low. That's why it's moving significantly higher. As you can see over here, it's only 78.59 million shares outstanding available, and for the public it's 72.29 million shares available for the public. And as you can see over here, a lot of institutions own, 88% of the shares are held by institutions. This is really impressive. As you can see over here, performance for the week, 17%, the quarter, half the year. The past year has been down a little bit, but it's just recovering significantly higher. Now let's look at a little bit in detail about this company. Let's look at this company in detail a little bit. So the market cap, as you can see, the market cap is $2.27 billion, and the EPS is 23.7. The 52-week range is between $127.88 to $319.17. As you can see over here, it's currently at 288. So if this company continues to grow, it can drastically test, the 52-week highs that it made over here. And the average volume is 1.3 million. It's actually trading above the current average volume. And that is one of the things that you want to see is, a lot of people are coming and buying it. And as you can see from the institutions, we just saw institutions are coming and buying it because of the fastest growth of this company. So that's exactly what we talked about. All right, guys. So also you can check out my previous video about the top 3 penny stocks for June. Those are all in the healthcare sector. You can go and check them out. And also, if you're new to the channel, make sure you like and subscribe, guys. And I will catch you guys on another video next time. I really appreciate it. I'll catch you on the next video, guys. So peace out.